Hello again, everyone. It's Vince Forer here from TradingWinds.com, and this is our update for April 20th, 2017. Let's take a quick look at today's markets. Well, we saw an impressive turnaround by the Dow today. It was higher by over 200 points at one point in the day, pulled back slightly near the close, but did finish higher by 174 points. The S&P 500 was higher by 17.5 and is back above that 20-period moving average, while the Nasdaq market was up an impressive 53 points, while the Russell managed a bounce of 17 points. So an impressive turnaround, to say the least. Bonds here continuing to pull back, albeit slightly, down 48 cents today, while gold was completely flat. And that was surprising, considering the move in equities. You would expect a more significant pullback, but it held on very nicely. At the close, it was down just 40 cents. So I still think gold is on the verge of a much bigger move, just like silver, as we've been talking about. Crude today down just 17 cents. So after that huge sell-off yesterday, it really took a day off here. Took a breather, sitting right near that upsloping 20. We'll see what it does tomorrow. Now, I want to talk a bit about what to look for into next week. But before I do that, I want to give you a reminder. Here is a clear example of why you want to set stop levels and adhere to them at all costs here. Here's OCN. And, you know, if you had looked at getting long here, let's assume you had gone in this area here, you'd want to set a stop. Normally, I look at using the previous pivot low as a stop level, and whether it's a mental stop, whether it's a hard stop order, whatever you want to do or how you want to do it, set yourself an alert to get an email or a text message when the price breaches that level, whatever it is. But, you know, if you ignored it and didn't set a stop on OCN today, I mean, wow, what a move. It lost over 53% in one day. So this can happen at any time. So you should always have that stop level, even if it's mental. Have that stop level in mind, and when price gets to it, act on it. Don't justify or give yourself reasons why you shouldn't at that point. Act on it. Now, I understand that this is bouncing after hours, but it's up, I think, about 6%. Compared to that 53% drop, that is not much. So here's, again, a clear example of why you need to follow your rules. Now, heading into next week, what you should really be doing is looking at the weekly charts here. And let's go through this. If you look at the weekly chart of the Dow, we could be in for a nice setup to the long side. So obviously tomorrow's session, after tomorrow's session, this weekly candle will close, and then we will know. But here, right now, the way it looks, the way it is right here, if we mark the high of this week's candle and we get a trade above it, I think we'll see a move back to these highs. If you look at the S&P, the exact same thing happening here. So keep an eye on these weekly charts. Look at the Nasdaq market. It's good for another run, and the Russell also looks ready for a move back above these highs. But again, the week isn't over yet. Let's see what tomorrow brings, and then we will reevaluate over the weekend. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.